Ladies and gentlemen, welcome back to the channel. Here in this video, we are going to be going over what AI thinks is going to happen next for AMC stock. Some good, some bad here. And yeah, I think you need to hear this. Now, AI could be right, it could be wrong. Obviously, this is just a model or an algorithmic prediction of what's going to happen with AMC. I'm also going to give you guys my prediction of what I think the next couple of months are going to have in store, and potentially what even next year is going to have in store for AMC as well. Hopefully this comes to you as good news, maybe optimistic to some, but hey, I'm known for being a little bit more on the optimistic side. What's wrong with that? Nothing's wrong with that. So hit that like button and subscribe to the channel. Let me know what you think about this information down below in the comment section. So first up, let's start with this AI situation. So AI has a new prediction for AMC stock by the end of 2024. This says AMC Entertainment has experienced a challenging start this year, with shares of the movie theater chain declining by almost 30%. This decline is likely attributed to recent dilutive measures undertaken by the company in recent weeks. On January 18th, Citigroup revised its AMC target for its price target for AMC stock from $5.75 to $4.10 while retaining its sell rating. This adjustment follows Citigroup's earlier price target reduction from $15.50 to $4.75 in September, subsequently raising it back to $5.75 in November. With a challenging start of 2024, Finbold utilized AI predictions from CoinCodex to see where the stock might end up by the end of December. Okay, this is where things don't look so good. With it, I don't know if you guys can see this on screen. I don't even want to say these numbers. 5-day prediction, $4.97. 1 month prediction, $1.72 per share. 3 month prediction, $2.29 per share. 6 month prediction of $3.18 per share. And a 1 year prediction by the end of 2024 at $9.77 per share. Holy moly. Oh my gosh. $1.72. Oh boy. That's going to be rough. And it looks like the algorithm predicts a spike here around March before then falling to ultimately these low prices. So wow, yeah, that would be no bueno, that's for sure, for AMC stock investors. That would definitely be rough if the stock hit $1.72. Oh my gosh. Says Wedbush analyst Alicia Reese highlighted a scarcity of theatrical content in January and February 2024, a repercussion of the SAG-AFTRA strike, and one of the reasons for AMC's bad performance this month. So it's not all about dilution, apparently. Now, as for technical indicators, they paint a contrasting picture, with the overall rating a sell at 14 and agreement from moving averages at strong sell at 13. Oscillators disagree at a buy rating of 5. So oscillators say the stock's a buy. The summary is the stock's a sell, almost a neutral. So we're almost neutral. And then moving averages say the stock is a strong sell. Whether this stock will manage to weather the storm and reap the rewards that seem to be waiting at the end of this year, time will tell. And that's just it too, because by the end of this year, you should be having a couple different things coming together that should be positive for our markets. Okay. So first and foremost, you are going to have the Fed cutting rates by then. Now, I should preference this by saying, here's what happens on average when the Fed cuts rates. On average, markets fall 23.5%, and it takes 195 days to bottom. So typically, you get a full-on crash when the Fed cuts rates. But normally, the Fed is cutting rates because something broke, and they have to accommodate the markets, not because, inflation is just falling and the economy is holding up very well. So I would just take this with a grain of salt to say, hey, it's a possibility that stocks would crash. It really depends what the data looks like and what the economic outlook looks like at this point in time. Take note that 1980, you actually see the markets return a positive return. That was after we thought we had got the first round of inflation gone, right? And we ultimately had somewhat of a soft landing during that period. And stocks actually went higher. 87 is where, yeah, things were not so good when you had to come in with Paul Volcker and, Volcker the system. And that was about a 10% fall at that time. Now, more recent times, you have seen some pretty sharp drawdowns. Like 2001, you were down 40%. 2007, you were down 55%. But what was happening during these times, right? Dot-com bubble, great financial crisis. Easy to point out. So it's again, easy to make conclusions that the first rate cut is going to be negative. I would just err on the side of caution when it comes down to that, okay? Now, I don't necessarily think markets are just going to rip and go crazy on an index level, but I do think some of the first rate cuts could be very positive for stocks like AMC. Small and mid cap stocks could help bring some money back into markets. And I think that's important because, I mean, if we get money coming back into the markets, that's going to be something that we have not seen in a very long time. You have seen net outflows to stocks for like 2 years straight. A stock like AMC, it's $4 per share because it's been diluting shareholders, right? That's obvious. But it's also $4 per share, down so much from all-time highs because there's no money in the system. All the money is getting pooled to Magnificent Seven stocks because some hedge funds and institutions, they have to be allocated to the markets. If you have to be allocated to the markets, well, where else are you going to be than Magnificent Seven? Because, I mean, you have a fiduciary duty with your client's money. You cannot put all of your money into small and mid-cap stocks. In fact, you're going to put none of your money into smaller mid-cap stocks. Or if you do, it's going to be highly selective stocks like an ELF or a, Super Micro or some of the other names that have done just exceptionally well over the past multiple years. So, with that being said, seeing capital coming back into our markets is going to be a positive thing at some point. But unfortunately, if we do see AMC dilute shareholders again, the stock probably is falling down to $2 per share. Probably. Let's just be honest there. The stock's probably going to get wrecked, and that's going to be rough. Because if AMC stock does raise capital and dilute shareholders, in the near term, well, I have unfortunate news. Earnings are probably going to come in line with expectations, maybe a little worse than expectations. What that is going to do, my friends, if S&P 500 EPS, let's say it comes in with 7% growth instead of the priced in 11% growth, which could be higher than that at this point. But the average consensus estimate is 11% EPS growth on the S&P 500. If you come in less than that and companies are guiding for less than that, coming here next week, you're going to get like Tesla, Netflix, some companies. And then the following week, you're going to get your big tech names. That's going to cause some downside in our markets for sure, because markets are already trading basically fully valued. A lot of analysts have estimates for the S&P 500 of 5,200 by the end of this year, but that's actually looking out on a 12-month PE basis and saying, hey, 2025 is going to be a strong year as well. So imagine it like this. Today, when institutions are looking out and saying, hey, what's my end of the year 2024 price target for the S&P? They're looking at this year's earnings, but the second half of the year's earnings, because then markets are going to start looking at the first half of 2025 earnings. So by the end of the year, you're not going to be looking at what happened in the first half of 2024. You're going to be looking at what's happening in the second half of 2024 and what's going to be happening in the second half or first half of 2025. Hopefully that makes some sense. So by the end of the year, theoretically, you're going to be looking at what 2025 earnings are going to be like, and that's where stocks are going to be trading on or trading off of, because typically, always, stocks trade on forward expectations, not what happened before. Okay, if those earnings come in poorly or lower than expected, valuations could be a lot higher today than we think. And especially if we did go into a recession, well, that would obviously not be great. Now, for December, December 18, 2024. Markets are pricing in 1, 2, 3, 4, 5, 6 rate cuts. You're almost pricing in 5 rate cuts. Now, we are set up in a better way than we were previously. When the markets were pricing in 7 rate cuts, it was hard to be bullish. Because what you're hearing from Fed officials, even Fed Bostic, that is one of the more dovish members of the Fed, for sure, one of the most dovish members of the Fed. Then you have like Loretta Mester, that is like a hawk. You have Fed Williams, a little bit more on the hawkish side as well. Fed Bostic definitely on the dovish side. Well, he even said they don't expect rate cuts to start until Q3. And other Fed officials have stated anywhere from 2 to 3 rate cuts is expected unless the economy were to evolve in a negative way, which would be bad for stocks anyways. So we're only expecting 2 to 3 rate cuts. If we head into January 31st pricing in 5 rate cuts, that might be okay. 6 rate cuts, a little high. 7 rate cuts, way too high. So earnings will change the estimates for rate cuts. Any economic data that we get from now until January 31st will change the expectations of rate cuts. And then January 31st, when we hear from Powell, and he's going to be a little bit on the hawkish side, for sure, a little bit on the hawkish side. That's going to also change estimates for 2024 rate cuts. Now, it seems like a lot of stocks were trading based on rate cut expectations. That's why your small and mid-cap stocks are getting destroyed right now. It's because they were trading on 7 rate cuts, potentially 8 rate cuts, as the estimate for 2024. Well, we're in for a little bit of bad news coming January 31st when Fed Jerome Powell says something along the lines of, we're not even thinking about cutting rates yet. If he says that and he does not greenlight the first rate cut coming in March, that's going to be a little bit of a problem because we're still pricing in the first rate cut coming in March with 52.0% odds. The odds of a pause, continued pause, 47.5%. May, you're pricing in 1 rate cut with 48.7% odds, and 2 rate cuts is priced in at 38.5% odds. A continued pause at 12.4%. So markets are definitely pricing in we're going to get a rate cut by May, but markets are pretty close to pricing in 2 rate cuts by May. And 6 rate cuts is basically pricing in a rate cut in March, and then every other Fed meeting throughout the year besides 1. So you still have a little bit high of expectations. That sets us up for a little bit of negative downside. Now, to my point, if AMC does raise capital and sell stock, at the same time we get not necessarily the greatest earnings and we get a hawkish Fed Jerome Powell, the AI predictor could be correct in saying AMC stock could hit $2 per share in that scenario. If we don't get dilution from AMC, then obviously, it's not going to be as bad, okay? But still, I would expect some negativity at that point. Now, once we get into the second half of 2024, that's where things start to change a little bit. Fundamentally, AMC stocks should be doing better at that point, and the markets will have more clarity on whether or not we're heading into a recession. We're going to know if the economy is accelerating, if the economy is heading into a recession, if we're late cycle, early cycle. Late cycle would be like you're at the peak of economic activity, boom, you go into a recession, right? Early cycle would be you're at the start of a boom, because there is a logical argument that you could make that the economy has been in a rolling recession for the past 2 years, maybe inflation coming down, maybe a little bit of deflation in consumer products. Fuel prices could actually spur the economy to do better. You just don't know. That's the problem. There's not a lot of clarity. Now, what I'm hearing, what I'm seeing out there is things are not that great. So I'm a little bit surprised on the Michigan Consumer Sentiment Survey that we got today. I don't think things are as great as that survey says, but, I don't know. Who knows? Nobody ultimately knows. But what I do know is the second half of 2024 should be a lot better. Even just look at the chart of historical performance during election years, right? The middle part of the year tends to be pretty bullish, and then you get a pullback towards the election. And then the end of the year after the election, no matter who wins, no matter which side wins, you tend to get a very bullish end of the year. So we'll see. Ultimately, I think you still want to be in small and mid-cap stocks, but boy, is it rough in the meantime. Thank you for watching, guys. Let me know what you think about this information down below in the comment section. As far as to where AMC can go, I don't know. It depends on dilution. It depends on how these things evolve. But I think AMC stock could still, if we were to get a commitment to not diluting shareholders, $20, $30, $40, $50 per share is easily achievable in my personal opinion. If we get a short squeeze at the same time, AMC stock could go a lot higher than that. So that's just my rough ballpark estimates. Let me know what you guys think down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.